Straight to the PSE, where we are seeing the bell ringing at this minute, happening for the all-day Marts IPO. You can see that on your screens here, everyone with a thumbs up, ringing their own bells. You have Camille Villar, Vice Chairman, at the floor, together with several bankers. She was greeting there with Veloso from PNB and Ed Francisco of BDO, part of the deal, of course, and other members, including Manny Villar, part of that Zoom virtual ringing as well. Now we can take a look at our terminal here. Taking a quick peek, it is at 90 centavos. That was, of course, the pre-IPO price already that we had seen. That's up by 50%. That's already the ceiling price there. Of course, this IPO was slated to be listed at 60 centavos per share. This is, of course, the supermarket venture of Philippine billionaire Manny Villar, and they have already raised ahead of this listing 4.5 billion pesos, 7.54 billion shares at 60 centavos each. Nevertheless, this actually happens to be the nation's smallest IPO in over a year. We'll have more of that all-day listing later on in the show. Now let's go straight to our top stories. The Philippines has incurred 506 billion pesos in economic losses from climate-related hazards over the past decade. The Finance Department says these climate hazards accounted for over 98% of the country's total losses and damage, amounting to 515.5 billion pesos from 2010 to 2020. Now, annually, the Philippines lost an average of 48.9 billion pesos from climate risks. This represents 0.33% of the yearly gross domestic product. Initial data from the Bureau of Treasury's 2022 fiscal risk statement showed that the country lost at least 74.75 billion pesos from disasters last year, including those caused by 3 consecutive typhoons. The DOF notes that the country constantly experiences unavoidable losses and damage amounting to 0.5% of its annual GDP from an increasingly unpredictable climate, because the Philippines is located in the typhoon belt and the Pacific Ring of Fire. Now, the government is planning to amend the rules of implementing the Build, Operate, Transfer, or BOT law. This is in a bid to avoid onerous contract provisions in public-private partnership projects just 8 months before a new administration takes office. President Duterte has named Socio-Economic Planning Secretary Carl Kendrick Chua as the chairman of an interagency committee that would amend the IRR of the BOT law. Now, in a joint statement, NEDA and the PPP Center said the amendments aim to protect the public from, quote, excessive payments and undue guarantees arising from PPP projects. At the same time, they said the goal is to promote the interests of Filipinos who ultimately pay for the costs and returns of private proponents of public-private partnership projects. The Interagency Committee is planning to publish the amended IRR by the first quarter of 2022. Exciting times ahead. Another IPO list this morning. Let's bring in Aaron Sai from First Metro Securities to talk more about that. Good morning, Aaron, and welcome to the broadcast.
Hi, good morning, Danny. Thanks for having me.
Okay, so 90 centavos is the pre-IPO price. It has, opened at exactly that amount. They've raised 4.5 billion pesos, 4 times oversubscribed even before this listing. Tell us, is this going to be a repeat performance of Mary Mart, which went through the roof, even from the first week of trading, or is it a different story? What is going to be different here when it comes to the all-day IPO?
Well, AllDay, as we know, no, is a billiard stock, no. So we have observed for quite some time now that the billiards have that, well, the Midas touch, no, as we call it, no, similar with that of Injapsia, no. Although we have seen Mary Mart recently not really performing that well, no. But as far as the fundamentals are concerned, no, as far as the reach of the retail arm, no, of MM and AllDay, no, we know that as far as VLL, no, Vista Land is everywhere in the country, no. Thus, the potential for AllDay also to be in more parts of the country compared to Merrimart. So I think growth-wise, no, the potential would lean towards, or would be in favor of AllDay compared to Merrimart. No? But that's not to say Merrimart would be a bad company, no. But relatively, no, relatively all days versus Mary Mart, no. I think all day has a bigger potential.
Okay, what about the valuations here? Some are saying that 60 centavos is reasonable. According to some analysts, it's 200 times forward earnings for Mary Mart, whereas this is actually 31.1 times 2022 earnings at the offer price. But what is your outlook when it comes to consumption, especially in 2022? Are they able to do it's quite, their target is to triple the stores in 5 years. Are they going to be able to do that? Is this valuation something cheap enough? How do you actually value a stock like this that has such high potential but in very uncertain times?
Yes, well, I think consumption, even in uncertain times, consumption has proven to be very resilient, no, and this happens to be the area, no, or the forte, no, of these companies, no. What happens in Merrimart was actually the relative low presence, no, relatively low presence compared with other retail companies, no, such as Pure Gold and RHI. But again, that limited presence is, I think, no, I believe, not present with All Day, no, which again has its with its affiliates having a lot of presence, no, in many parts of the country. So I think the target store opening for All Day is not really that optimistic. No, I think that's only
Okay.
fair, no, for the next 5 years. Thus, I think the initial valuation for the stock at its IPO price is really not that bad.
Okay, what's your general outlook on retail stocks in general? You mentioned that they're best poised to take advantage, of course, of the economic reopening, but has that already been fully valued in the price? I think I have on my terminal here, the differences between you've got pure gold in red, staying through the course, at least in the second half of the year. You've got RRHI also on that course, but you've still got a couple like 7-Eleven, Mary Mart, the likes of that, not really going back to the levels that we were seeing pre-pandemic.
Well, two factors, no. First and foremost, for the likes of RHI, no, especially more especially pure gold, no. We have seen them to be very resilient amidst the crisis, no. So they may still benefit from the reopening, no. But as we have seen, there are a lot of laggards, so there are a lot of excellent companies still, the cyclical names we call it, the banks and the property counters that have yet to be appreciated as much by the market. No, so if the market would really turn bullish from here, and if the COVID numbers continue to decline and even disappear, no, we hope so. No, when moving forward, I think another challenge, no, challenge for retail, for the retail sector would be competing with the low valuation and higher prospects, or in terms of growth that could come from the laggard, no, which again are the property and the banking sector. But that's not to say that they would not earn as much as as much as they did during the pandemic. As we know, we are a consumption-driven economy. No, as long as they maintain their position, their leadership position in terms of pure gold and RHI, and maybe the growth that they promised, no, especially for all day, no, moving forward, I think they would continue to experience growth, no, as the purses, no, of the people grow moving forward.
Okay, so it's not a laggard sector. Some have already benefited to date, so it's not going to be such a bargain compared to others. But nevertheless, like you mentioned, quite a sure play when it comes to the reopening of the economy. Let's talk about general markets and check in on the index here. We're up by 0.8%, 71.59. We had quite a slump, 3 straight days of selling. What is causing this, Aaron, especially since there's such optimism going on already in the markets, at least when it comes to the COVID cases and even the daily news? We might be alert level 2 soon. We have 70% of public transport. Why is there such a strong resistance level? And why do we keep bouncing between these two bands?
Actually, I'm also curious. I'm also curious. The declining trend, no, the declining trend in the COVID cases, which I think should be the bigger factor, no, or maybe the biggest factor amongst them all. No, that should drive the optimism of the markets now moving forward. We have already seen it for weeks already, that the declining trend, no? And we have seen the lowest yesterday, and yet no, and in the recent days, so, and yet the market is somehow lackluster, no, at best, no, and maybe declining even, no. But the decline, as we have seen, came from the decline from the previous high flyers, which have been recently included in the index. So as far as the bigger names are concerned, no, especially the banks, no, and some property names, they have actually started recovering. But again, for me, for me, chart wise, the key number to look at is 7,400. No, the 7,432 high. I think that we made in January. If we still fail, no, if the market still
Mm.
fail to close above it, no, decisively at that, I think there could still be selling pressures. No, but the good thing is if we seen it be taken out, no, by the market, the 7432 level, and I think there should be more cost for cheers for the market moving forward.
What will be the catalyst to break the to get to 7.4? Do the earnings still have anything to do with this? Like you mentioned, it's already been declining cases na and reopening of the economy. You're two months left in the year to reach the 7,400 target.
Definitely, no, earnings would play a major part, no. But as we have seen in the likes of URC, for example, no. So URC, as we know, is a very good company, no, has withstand the test of time, no, especially during the crisis. But we have seen even in with the flat growth, no. First and foremost, we have seen flat growth in revenues, and they were met by higher commodity prices. So their input costs
Hmm.
actually went higher, no. They only benefited from the create bill, no, which provided that needed bump for the profit. As of now, in terms of the whole PSEI is concerned, the market is actually factoring in 27% profit growth moving forward. So I think if the market could somehow be more convinced that the reopening could provide a bigger bump than the 27% implied profit today, I think the market could muscle through, no, the 7,400 level. Of course, we are still on the lookout as we have seen the long-term chart of oil really breaking that
Hmm.
resistance. No? So again, that could be a really, really real dampener, and as we know that could really be an ugly head, no, as far as inflation is concerned.
Okay, and which earnings do you think? You mentioned already URC here. It's actually the best performer now after having slumped for a few days amid that earnings release. What are you looking forward to when it comes to earnings? Which sectors in particular might be surprising on the upside?
Well, if the situation, the COVID situation continue to improve moving forward, then the thesis for the relative outperformance of reopening winners should be there. No, actually, again, my thought was we should already be seeing that today, no, or recently, no, or in the past weeks, no, but we have not seen it yet, no. But if we come to that point, no, that the market really appreciates what's been going on in the vaccination front, really appreciates what's going on in the COVID, and of course the cheers that the Christmas might bring, no, this year. I think the reopening winners, meaning the laggers and consumers, I think the no, property sector, if discretionary spending, no, and would go continue to improve moving forward, and definitely they would be beneficiaries, no, amidst lower valuation amongst big developers, no, like Ali, RLC, among others.
Okay, last question, Aaron. What about the mining and oil counter? You already mentioned, the oil prices here, but you've also got that energy crunch happening, and now you've got the latest trend coal futures plunging 30%. Government of China stepping up its efforts against coal. Tell us, people were quite excited for the likes of Semirara, for example, which had jumped and given quite high dividends in the past couple of months. What is this counter going to be looking like? Is it still something worth watching?
Definitely, no, definitely. Well, the seminary was up 100%. That is October October high, no, and we have seen it dropping by a quarter. I think 25% from I think based on yesterday, no. The stock has really benefited from high commodity prices, no, as well as increase in oil prices. If you look at again, if you look at the chart of Semirara and compare it with oil price indicators, I think there's a fairly good correlation between the two, no. And with the premise that basing from what we have seen in the long term chart of oil, no, with the premise that the oil counter, no, or the oil indicators have really bottomed out, no, and would start moving higher still, no, moving forward. I think there could still be a room for Semirara's business, no, or earnings to grow moving forward. And if the price could, if the stock price could follow through that earnings growth moving forward, then I think that it would continue to be interesting stock moving forward.
Okay, so still some potential there despite some bumps on the road there for Semirara. Thank you so much. Very interesting insights, Aaron Sai, First Metro Securities.
Thank you, Danny.
Here are the other headlines we're keeping our eyes on. ING Bank says the Philippines' GDP growth likely slowed to 3.8% in the third quarter from 11.8% in the second quarter due to intermittent lockdowns. ING Bank Manila senior economist Nikki Mapa said despite the slower growth, the Philippine economy remained in positive territory in the third quarter as well as a quarter-on-quarter basis. Mapa explained that this will happen because authorities are now relaxing mobility curbs while vaccine efforts continue. But the economist believes that the country may stay in recession as overall economic activity is subdued. Despite the nascent recovery, Mapa said that the return to pre-COVID levels of GDP appears at least a year away. This, as Mapa says, new challenges to growth have emerged in the near term, while inflation continues to be pervasive. Now, Converge co-founder and president Maria Grace Uy is part of Forbes Asia's 2021 Power Businesswomen list, which recognizes 20 outstanding female business leaders across the Asia-Pacific region. Forbes Asia recognized Uy for her role in growing Converge into, quote, one of the largest fixed broadband operators in the Philippines. In a statement, Forbes said the businesswomen honored this year were selected for their accomplishments in managing either a business with sizable revenues or a startup valued at over $100 million. Forbes noted that Uy led the negotiations for a $250 million investment from Warburg Pincus, a global growth investor, which was used for the expansion of Converge's fiber network. And that's the first look into the business day. Today is Wednesday, November 3rd, 2021. Catch Businessworld Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.